The last 20 times this happened, markets went parabolic. I'm in Indonesia, Bali right now, and today we want to talk about what happens in a stagflated economy. Because if what happens for the potentially 21st time in a row, we are going to be making more money than ever. And you should have realistic goals and strategies so that way you guys can make sure you can live and experience the culture like this. Because I don't care how much money you make. Experience something like this in Bali, Indonesia gives you way more value and experience than making a 2, 3, 4x on crypto ever will. So here's my crypto strategy and what you need to know about stagflation.
What was your reaction to Fed Chair Powell's speech?
Well, that was a good speech. I think he laid out the options in front of us and not commit to anything. This is important. I know the markets think that he's committed, but I think at this point, there's a lot of uncertainty. I know that word's being used a lot, but the signals are mixed. And I worry right now that we're in a period that, while it's not the 1970s in terms of stagflation, it feels a little stagflation light, a little stagflation-y. We are seeing a reduction, and the chair alluded to this, a reduction in our labor force, a combination of the participation ratio going down and immigration turning negative. And so you cannot expect, when you're seeing a declining labor force, that you're going to get 100,000, 200,000 jobs. The people just aren't there. And you see the other signal, which is the unemployment rate's not really moving substantially up. That tells you something else is going on in the labor market. Now, it's soft and people are cautious. Businesses are holding back some and hiring. But it's not yet in a terrible situation. So I think we can't lean completely to the labor market, that part of the dual mandate. We also have to keep our eye on inflation. I think the real action in the economy, I trust my colleagues in the FOMC to do the right thing. They're not always going to get it perfectly right, but that's not where the real action in the economy is. The real action in the economy is on the fiscal side, right? In terms of what we're spending, are we stimulating growth? Are we bringing in this talent we need in this country to fuel that growth? Those are the things I'm deeply concerned about. So you think about what's happening. We're adding more to the deficit, and the estimates are, say, $3.5 trillion over 10 years. In addition to what we're already doing, that means more issuance of treasuries into the market. Why would you expect long rates to come down in that scenario? There's just, unless there's some surge of demand for those treasuries, why would you expect it to come down anytime soon?
So now that you know what stagflation is, and you know that wages are about to be outpaced by inflation, we can expect that risk-on assets like Bitcoin, like crypto, stocks, etc., are all going to do really, really well in 2026. Now, this doesn't mean we're necessarily going to go into some super cycle or extended cycle, but what it does mean is that stocks and crypto assets are going to perform well because the value of the US dollar is more than likely going to deplete as the money printer gets turned back on and the Federal Reserve starts to cut interest rates. Look at these birds just eating through the rice fields. This place is beautiful. And this is why it's fundamental you have a strategy right now. If you haven't seen this website, this is what the F happened in 1971. And what it shows is how wages have been outpaced by inflation forever, really. And this simply means that the 1% are going to continuously get wealthier than the 99% because of the expansion of our economy. And how you protect yourself from this is buying hard assets, is by getting into the markets that are going to perform well in a high inflationary environment. So this includes Bitcoin, gold, silver, tech stocks, AI, etc. Personally, some of my favorite cryptos are tokenization products like Ondo or Chainlink, Ethereum, Bitcoin, and you can let me know your favorite cryptos in the comments right now. My wife is doing yoga up there right now and it's just at bliss. Like, just look at this beautiful temple. I mean, who wants to just move to Bali with me? Honestly, I forgot what I was talking about for a second. Oh yes, how to prepare for a stagflated economy. Create a risk-averse portfolio. In my opinion, this is the 50-25-25 rule. Imagine you have a farm. 50% of that farm would be in Bitcoin. 25% of that farm would be in altcoins, large caps like Ethereum, Ondo, Chainlink, etc. You could also mix the 50% with things like stocks. Maybe that's Tesla, maybe that's Netflix, maybe that's gold, etc. The other 25%, which the sheep is yelling at me right now, is going to be your low to mid caps. And from there, you need to set realistic goals. So let's say you start seeing 2, 3, 4X's in your portfolio. Every person watching this video wants to ask, Josh, when should I take profits? When should I get out of the market? And the reality is it's very individual. That question is very individual. It's up to the person. Because, for example, I'm 27 years old. I have no debt. You might be 40, you might be 18, you might have college debt, you might have student loans, you might have medical bills, you might have car payments. And as we see this market inflate and we see wages get outpaced by inflation, your number one goal should be to pay off all of your local debt. So if that's $20,000 in student loans or $3,000 in medical debt, if you don't pay off that debt, the interest is going to get harder to pay off because you're not going to be able to afford as much in the economy. So personally, being in a very fortunate situation with little to no debt, obviously we have some credit card stuff that's just meant for literally compiling my credit score, because that's how the world works these days, is I have a 50-25-25 strategy. I hold probably roughly 20 different cryptos. The majorities, Chainlink. The majority, Ethereum, Bitcoin, Ondo. And then it kind of filters off. But we do have a lot of large cap positions. As those positions become more valuable, what I'm going to do from there is simply rotate that capital into Bitcoin as much as possible. Because whether we get an extended cycle, whether we get a super cycle, we don't actually physically know. No one could predict the future of the market. We know that it's very bullish. We know that interest rates are coming down. We know that Trump's deregulating. We know that peace is in conversations between Ukraine, Russia, which could mean better trade deals, cheaper oil, cheaper supply chains. And that could all extend us into a very prolonged bull market in 2026, as you've seen the last 20 times. Again, the last 20 times the Feds have pivoted on interest rates, the S&P 500 sees on average a 14% return to the upside the following year. By the way, if you want to know where I am in Bali, Indonesia, we're at a place called Numeria right now. It's in Ubud, and I think I'm pronouncing that correctly, pretty much in the center of Ubud, right downtown near Monkey Forest. But with the expectation of the returns now, of that 20 out of 20 times, this would be the 21st time in a row that the market see a 14% return. You're going to see risk on assets, tech stocks, and everything do very, very well and perform very well. So when's the best time to buy? Obviously when markets are down. Wait for those RSI, wait for those pullbacks. If you need help with that, come join our Discover Crypto Discord. The link is in the description below. We analyze and enter market positions all the time together. But the number one focus should be setting goals and realistic expectations, because it's only going to get harder to pay off debts in the future as stagflation persists and wages are outpaced by inflation. Also, I swear to God, I think I'm going to extend my stay in Bali. This is the most peaceful place I've ever been to in my life. Hit that like button and comment down below which altcoins I should be paying attention to and how you're preparing yourself with your risk strategies for 2026.